Okay, I think we're live. I just want to review today's session on the S&P 500. Today was a very strong trend day, and I want to review the action. I want to review how I traded it, how I viewed it. I want to talk about things that I did right, things that I did wrong, my executions, what made me buy, what made me sell. I just want to break down today all the levels, all the setups, all the confirmations. I'm sure a lot of people are in the same boat as I was. Missing the earlier long on the S&P, seeing it rally, and then trying to fade it and go against the trend. So I just want to review this. I want to make sure everybody's on here. I think we're live. Okay. So let's just take a step back and let's go to the pre-market session. Let's act like the market's not open, and I want to go over my pre-market plan and the levels that I was watching for, because what's, I guess you could say, frustrating about today was the plan worked so damn well, but I kind of went against my original plan. So pull up the pre-market plan. Again, I post these every single day in the Discord. In the Discord, there's no alerts, no signals. Everybody takes their own trades. I just talk about what I'm watching, why I'm watching it, how I view it, how I trade it. That way everybody could go back, reverse engineer it, learn from trial and error, and see what Carmine was thinking at that exact moment. So in the pre-market session today, the main thing that I was watching for was this zone here at around 54.30 to about the 54.50s around, which just is yesterday's afternoon high combined with yesterday's open. There was no supply, there was no resistance from yesterday's drop despite the sell-off. So my plan today, before the market was open, revolved around, if the market can reclaim this 54.35 level, which if it's best if it happens in the first hour, this would be a very bullish event for me, and I would look for longs targeting yesterday, high a day, which is around 5,500, to a level of resistance that rejected yesterday. Yesterday, we rejected the 54.82s. I'm not sure how many people are on this stream that let me see one sec. Let's I'm not sure how many people were on this stream or watched one of my videos and reviews from last week, how we had this 54.82 to 85 level. It was a strong level of resistance that the sellers were very strong in the market. So the main thesis today was, if the market can reclaim above 54.35, which is this gray box, to 55.50 or 54.50, which is yesterday's open, there's nothing stopping the market from rallying up into yesterday's high. Call it 5,500. So this was my bullish plan. Essentially, if the market could, I'm going to highlight this for you all, break above this level and hold above it, we would rally and target a break of yesterday's high or break these 82s, which was a level of resistance. A lot of my setups and a lot of things of how I view the market and trade is coming up with levels of interest. Call this our X level and call this our Y level. If our X level breaks, there's nothing stopping the market from going up into our Y level. This is basically an area where there's no supply, there's no resistance, that the market should have an easier time rallying and breaking out. So this was my plan in the market before it was open. We open up, and I don't normally mark, and I talk about this in Investor Trade a lot, I don't normally mark highs, lows, opens, or closes. However, there's something that I'm always aware of. And marking yesterday's close at 53.98, I'm going to mark this as, call it a yellow line right now. The market, if I were to fast forward to the open of the intraday session, bounced perfectly at yesterday's close and held it very well. Now, something that I want to observe here is the pullback into yesterday's close was supported very well, and on this rally, we're going to see some significant buying volume that I was watching for a potential move to the upside to play the market long. And I'm just reviewing all of this so you could kind of see what was in my head at that exact moment. And I feel like a good part of Investor Trade is that you could go back and see exactly what I was watching, why I was watching it in that exact moment. And the main thing that I was watching for was, we were holding yesterday's close at the 98s. We're supporting it. If it could hold, then it's likely for the market to gravitate up towards that level of interest that I just mentioned. So now my idea was, now let me look for longs because the buying volume is strong to target that 54.35 to 54.50 level. Now I'm going to pull up the heat map and we could kind of see what was going on. Disk space is low. This was just a level of, let me go back to about 9:45. This was a level of lower volume here around 54.20, 54.18 that I was watching for a pullback into it. We could see, I'm going to highlight this again for you all, a level of just lower volume starting 54.19s all the way down here to about the 54.12s that I was watching for a pullback into this to get long, again targeting that level of resistance to the upside. Now the issue with this is that this setup I missed. It kept rallying up, kept moving up, up, and up, and we eventually hit that 54.35 target, and the market essentially from there goes bananas to the upside, and we have a very, very strong rally up with essentially no pullbacks. Now, at this point, the market to me seemed very overextended. I don't normally like using the terms overextended, oversold, overbought, because kind of those are like a little bit irrelevant to me. But throughout the whole morning, all I was doing was watching for pullbacks to get long, that if we can pull back into the levels, I would target that upside level of resistance. I'm always basing my analysis off levels of interest, and I'm looking for ways the market can gravitate towards there if the volume is supporting the market in that direction that it's moving. In this example, the direction the market was moving was to the upside, and there was significant buying volume lifting the market higher. So my thesis in the first, call it hour, was to look for pullbacks to get long, targeting the levels of resistance to the upside. Now, the issue was the market really never pulled back sharply, aggressively, or violently, and it just was every single dip to the downside kept getting bought up. On a 1-minute chart, we could see every single sell-off right here got bought up. This sell-off right here got bought up. So did this one, and so did this one. So every single upside move got bought up, and we continue to rally to the upside. So when you see something like this, reviewing one of my mistakes here is to not go against the trend or not go against the momentum. If the moving train is moving in the direction against us, let's not step in front of it. So what I mean by that is if we're looking to play shorts, let's kind of avoid that completely and only look to play pullbacks. The issue that I had here was the market never had a deep enough pullback for me to get long. At every single point that I highlighted here, I wasn't comfortable longing the highs because the pullback was not deep, it wasn't sharp, it wasn't aggressive enough, and it really didn't offer the best R multiples. So we kept moving up, and I want to highlight here around 10:19, 10:20 Eastern time. This is what I call zero prints. There's essentially no volume on one side of the market. I'm going to speed up this replay, and I want you all to keep an eye on, let's go to 10:17, 54.50 to 54.49. The market's going to aggressively rally here. And on this aggressive rally, we see zero volume on one side of the market at 54.50, 54.49. These levels are magnetic forces in the market that the market tends to gravitate towards to fill, to offer a fair opportunity for other buyers or sellers to transact there. So the level was at 54.49, 54.50. This was around 10:30 or so Eastern time, and kind of my plan now flipped. Pulling up the Discord again, every single dip was bought. The move's getting very extended, and what I was watching for was a rally into the level of resistance to target those 54.50s. I'll pull up the Carmine Dill updates in the Investor Trade Academy. We had the zero prints there, and the main thing that I was watching for, again, was a pullback into those zero prints. Now, this kind of flipped my bias because I know how strong these levels are, 54.49, that they tend to always, I don't want to say always because that's not the right term to use in the market, but most of the time fill. They have a very, 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 very high probability of filling. Now, the market continues to rally, and again, we haven't seen one sharp, aggressive, violent pullback down. This was essentially a 100-point rally without one pullback down, at least stopping out any longs from the rally. A good way I view the market is I'm putting myself in the shoes of other traders. Put yourself in the shoes of other longs. If you're long, call it at any one of these ovals, even you're long in a breakout up here. Not 1 minute today were you underwater, or not 1 minute were you under pressure on a sell-off. Meaning, even if we did get long at any of these ovals, this pullback right here never put us underwater. So there was no real reason, I guess, for buyers to cause a panic sell-off, or there were no real buyers to stop out of a position because the pullbacks weren't deep enough or the pullbacks weren't aggressive enough. And that was one of my mistakes today, was I was going against this trend. Now the market rallies up, and what I see here is, I'll even pull up my execution chart here so you can see these are all my executions today. What I kept doing was I was shorting the pops. So the first trade that I took here, I shorted the pop around the 54.75s, going for the 54.50s. This first trade, and the point I want to get here in this video is that this first trade was a smaller loss. If we were to look at the running P&L, this trade was up about $13,000 in 6 minutes time. This trade worked out in my favor. The market sold off. I got good confirmation of short to highs there. We sold off, but we missed the zero prints at the 50s by 5 points or so. Didn't let this trade really go to my original stop loss. Stopped out of this trade essentially for break even. A few minutes later, re-entered the same exact setup at a better price at the 77s. The market sells off down to the 63s. And this trade similarly was in a decent amount of profit on me. $6,500 in 10 minutes time. And then eventually the market rallies and I stop out of this trade again for a loss. 5 minutes later, I re-enter again short, sells off, stop out for another loss. And then about 30 minutes or so later, I re-entered short again and then stopped out for another loss. So my whole thesis today was I missed the earlier long. And because I missed the earlier long according to my plan, I went against the market because it didn't make sense for it to be up this high. And despite the confirmations being good, despite the setups being good, I'm not going to argue that these were bad setups. In my opinion, they were excellent, perfect, 10 out of 10. I would take these every single day. I wouldn't even call this revenge trading. I would take these setups every single day. And I've taken plenty of setups like this that work out A+, perfect all the time. It's just that today the market lacked that selling pressure. And the point I'm trying to get here is that I feel like if I took the earlier long, despite my plan working out so well, I would not have taken these shorts, because if I took that earlier long, I would have most likely walked away and called it a day and not trying to force these setups and make some profits that I may have missed on the setups. So the volume today really did not support the downside move. And a good way to kind of avoid this, just a really good tip, we didn't see it today. So this tip that I'm going to give you really didn't work out too well because it didn't occur, is that if you're trying to step in front of such a large, aggressive trending move and you're seeing the dips get bought up intraday, one thing to do is put a negative sign in front of your chart. And what this is going to do is it's just going to inverse the chart. And some people are just so blind to longing. Some people are just so blind to shorting. And putting a negative sign in front of your chart will kind of help. I don't want to say flip your bias, but it'll kind of help keep you on your toes. Because if we were to look at this chart, this would be trying to like long or catch a falling knife. And one of my rules is that if the markets, call it being bought on every single dip, there's no reason to be a first seller or get in the first sign of selling activity. What I would rather do is wait for the market to reject, put in, let's just say, a lower high, reject sellers, break the structure, and then play longs as the dips are getting sold into. The reason why the market didn't sell off today, obviously, a lot of people are having these theories of, okay, it's being propped up by Trump, it's being propped up by these tariffs. Sure, that may play a factor, but the main reason is that any buyer that got long on the earlier morning rally never was put underwater or never was put under pressure. On top of this, every single dip down was just an opportunity for buyers to continue to buy, and the dips were not met with aggressive selling, or the dips were not met with continuation, again, putting these buyers under pressure or putting these buyers underwater. So it was just a significant trend to the upside, and today's one of those days where okay, it's frustrating to lose money. It's frustrating to end the day red. I'd rather deal with a loss than deal with not taking a setup. And truthfully, like if I didn't take these shorts, I think I would be more frustrated not taking them than actually taking the loss. But what's more frustrating and more, I think, annoying is that missing a setup forced me to go on the opposing side of the market. And having good analysis means nothing if your execution's not there. Like the analysis all today called for longs. And I missed the longs, which then forced me to go short. And I'm not sitting here trying to complain. I'm just sitting here to be transparent about my mistakes and how I'm reading the market. That way, if anybody's in a similar boat, number one, you can understand that people are with you in that. And number two, you can easily get out of it if you just realize that you have to learn from your mistakes. So again, I'm not sitting here trying to complain about losses. I'm just trying to show you all and highlight what I did right and what I did wrong. My analysis was right today, but my execution was completely wrong. And again, I would take these setups 100 different times. Perfect rejections at resistance, perfect rejections at the previous day's sell-off. And it just simply did not work out on me, and I can't do anything about it. So that's pretty much that in terms of the setups today. And I mean, I'll show you how my month's going so far. My month, I would say, recently has been, I mean, I haven't had a green day in the past week and a half, truthfully. Thankfully for risk management, but today definitely was a bigger trade. And I do have a 3-loss rule. After 3 losses, I call it a day. I took a 4th setup today. So, I mean, I don't know. I'm sure a lot of people are in the same boat, which is kind of why I wanted to do with these longs. But one of the biggest things for me is that I feel like it's better to take a loss on a setup than to be fearful and to miss the setup with the right analysis. I feel like it hurts more not losing, but it hurts more having the right analysis and not taking the setup because maybe you missed it, maybe you were fearing of losing profits or whatever. But that was pretty much how I viewed the market today. And then another big confluence for me, what I'm going to do here is I'm going to add, let's go add study. I'm going to add compare with, and I'm going to add the NASDAQ here. So what we're going to see on my charts here is, I don't know why it's like this. What we're going to see on my charts is, I'm going to add the NASDAQ. This is a pretty cool thing to do. You could do compare with, and I'm going to compare with the NASDAQ futures. And let's add a candle here. I'm going to put it in white. Really kind of what gave me more confluence. This may look a little confusing right now. You know what I'm going to do? I'm going to do this instead. Let's remove this. Let's add a second chart. Really kind of what I liked here, and somebody brought this to my attention in the Discord, was that as I was taking these ES shorts, the NASDAQ was breaking above the previous high and failing. So looking at this rejection of the NASDAQ here, it was breaking the previous day's high and failing, while the S&P was hitting this resistance level and failing. And that was one of my confirmations. And again, they were good trades. Look at all my executions. All my executions technically worked out. It's just that the market failed to, hold on, let me pull this up. The market failed to sell off into my targets. So, I mean, if we were to just zoom in, like after every single one of my entries, the market sold off. Sold off, sold off, sold off. It's just that it failed to continue to sell off, and it failed to build to the selling volume that I wanted it to build because, again, the buyers were never underwater. The buyers were never in pain. So that's pretty much how I viewed the market today. I'm sure a lot of people are in the same boat. And truthfully, like, here's another thing. Like, on this first trade that I was in, it was probably the best one. I was up over 5 figures on this trade in 5 minutes time, and I did not sell this because I was in profits. I kept holding, right? I kept holding this setup despite being in profit. What was it? About 13K. And this trade eventually went into being red. This was a 4-to-1 planned R multiple. Second trade was a 4.5-to-1. Third trade was a 5-to-1. And the fourth trade was about a 6-to-1. So, I mean, I did nothing wrong other than the market just wasn't agreeing with my analysis and my timing at that point. So, and I think a very good lesson that I explained was, if the trend is like this, let the market reject. Don't be a first seller. Don't be a first buyer. Let's flip this chart, right? Let's call this first buying. If the market's rejecting on every single rally to the upside, don't get long on the first sign of buying activity. Let it bounce, let it move up, and then we can get in long on a retest. Because think about this. This is just the inverse ES chart. Let's say we're selling off, and then all of a sudden we get a bounce. Okay, yes, we can rally from here, and yes, we can move up. But I could almost with confidence say that on this rally up, there will be some type of buying activity that occurs here that, let's just say we miss this rally, let it pull back and let it retest where the buyers prove strength. And if it retests it and holds it, this just validates that buyers are here supporting the market and we can get in long on the retest, not get in long on the first sign of buying activity on this ES chart. Every single move up failed, and I could continue all day long. This is what I call being a first buyer. So that's pretty much it. Anybody have any questions? I'll go through the YouTube chat right now. I'm going to put a poll in there right now. Let's do a poll. Start a poll, and let's just see, how did you do today? Were you green or were you red? I just started a poll in the YouTube chat. Click that. I'm just curious to see how many people did. So 56% of people, 40 were green, 60% were red. Okay, so more were red than green. Yeah, and I'm pretty sure that, why don't I take partials? The reason why I don't take partials is that I just feel like it skews up my risk to reward. The only way I will take partials is if my target hits. So let's just say the market sold off. Like this green box was my target all day. Let's say on this first setup, we sold off into my target. I probably would have taken 75% of my trade off there and held partials then. But I don't take partials prior to my first target hitting because that will just skew my risk to reward. I'm big into risk to reward. And if I take partials before my original plan target, that just skews up my original plan and my original risk to reward ratio. So I think that's a big thing, is that not taking partials beforehand, only taking partials at your target or after your target hits. Because if you don't do that, it's just going to be a little sticky and confusing with your risk to reward. I'm big into R multiple. I'm big into risk to reward. It's one of the tools in the market that it's one of the only things that we can control. So if we can control our plan and our risk to reward, everything else that's out of our control, we can't do anything about. So risk is one of the only things that we can control. That's why I'm big into it. How do I stay in a trade mentally, knowing I'm up a decent amount of profit? I don't want to say don't look at my P&L, but knowing that, okay, I'm up, let's just say $100 in simple terms with a lot of traders' accounts. Even if I'm up $100 here, if the market drops to my target, I might be up 300, 400. So what does the profits that are unrealized right here have to do with if my plan works out and my target hits? The potential profits that I could have if I just follow my plan. So it's so important to follow the plan and not let you being in profits affect your decision making. What time do I enter? I enter based off the tape. I enter reading the order flow. I do not enter off of a 1 minute, 5 minute chart. I'm simply entering and exiting when the volume tells me to enter and exit. And this is how I'm able to get the entries like this, right? Let's just say I waited for like a 5 minute candle to close. So this is actually a good little tip right here. Let's just say I was waiting for a 5 minute candle to close. Right? Look at my entry here. My entry is at the 75s. This enables me to have a stop loss here at the 79s, call it. 4-point stop loss. If I were to wait, hypothetically speaking, for like a 5 minute candle to close or like a break under the previous 5 minute candle low, I mean, now I'm getting short at the 65s, call it here. And now my stop has to be at the 80s. You see how confirming it not based off candle structure enables me to have such a better entry than if I were to wait for a candle structure to enter? I get better entries, and this, again, enables me to have better risk to reward ratios by entering when the market tells me to enter based off the volume, not based off candle charts. So that is pretty much the setups for today. If anybody has any questions, message me on the Investor Trade Instagram. The link for that will be in the description below. I definitely, if you have any questions, just message me on there. I'll try to go through them in a timely manner. But again, like, even if you wait for like a candlestick to close on a 5-minute chart, all right, let's just say you see this lower wick here. Well, guess what? By the time you enter, you're going to be entering up here, up here. Well, I could guarantee you something in the order flow signified buying was here, and it would have been much better to get an entry long, let's just say here, versus up here.